Hey everybody, a little bit of a late video going out early this morning on Monday. Was tied up on Sunday, but really quick. It's not going to take long. Last week, exactly what we thought. 45.41 we started the week. 45.45.86 we ended the week. 45.45 September highs from last year. It's exactly where I was expecting, like I was posting there on Friday for everybody, where they would make everybody guess more by closing right there, and that's exactly where we closed. I'll show you the candle later on. We finished the month of March up 3.83%. We are obviously green for the month of April, starting at 45.40, and 45.40 is where we're going to be looking for the monthly candle. So having already had the January and February months be red months, we're obviously looking for this to be a continuation. Traditionally, April is the strongest month out there. Obviously, things are a little bit different now because you've got the inflation, you've got the war going on, everything like that. But anyway, January bottom, tracking all of these moves. And here, since we had that March bottom, we had an 11.53% move, 12.7 off of the February bottom. And here's the little dips that we had. We had a little 2.45% dip one day, 1.28% dip the other day, 1.46 over 2 days, almost 1% on March 25th, 1.27 on the 28th, and when we had just over 1% on the 29th, and obviously everything's been bullish, and that's exactly the direction that we've been looking for on this. Like I had posted out before, following everything here, that 46 area was where we got into the promised land, and we get into freedom once we pass that 45.82, which you can see over here. 45.82 is your January low on the first dip, the initial dip down. So it's also your double top over here in February where you had the 45.90, 45.95. So that move that we had here last week, with this being wave 3 that I'll show you, this looks very strongly like it could be a completed wave 4 at 2.8%, exactly where we came down to. Like I had pointed out, we're above the 20%. We're above the 20-day moving average, the 50-day moving average, the 200-day moving average, and the 100-day moving average is right where we closed. So again, everything here still looks very, very bullish. No reason to be looking for a large downside move yet, and I'll continue to show this as we go to the next chart as to where we are and why that is. Here's your March low. 3.2% drop when we got down to that March low. And here are your moves, these little dips that I was just telling you about, all the way up to this 12.7% move, which is stronger than October, where we had that last move going in to start wave 5 back in October of last year. And again, 45.82 is where your line is. 45.82, above that 45.82, that is where the bulls are in complete control. And I'll show you where we're looking for as we go into the rest of this month. Because here we are. You've got your 1, 2, your 3 waves for 3. Right up there, didn't fill that January gap yet, which is fine. We left another little tiny gap right over there last week, a tiny little gap up there above 46.25. And we came down here perfectly tagging that 23.6 retracement back down to the February low. Just tagged the 23.6 retracement earlier in the morning on Friday, right down to that March low. Bounced off of those perfectly. Again, 45.45, that's your main line of control right now, and it's what everybody should be considering for that main line of control, having been the September highs from black last year. Here's your wider picture of everything, how it looks, and again, same thing. This is just to show you where we are. I'm going to go back one line because the bears don't really have anything to fear. This looks like a completed wave 4. 200-day moving average never got touched. We could obviously drop down just a little bit lower, but I just don't see where it's going to come from. That's where my problem is. What I'm looking at here is, with this being a completed wave 4, I'm looking for wave 5 as we go into the middle of the month for OPEX and as we start going into earnings to come up here somewhere around 47.17 with, if you remember, 47.10. That's our big line up there. Showed you this. Here we are. Boom, boom, boom. Same thing. Just giving you different looks on this, which I'll throw into the email. This is your VIX, okay? This is your wider VIX, the 180-day, 6-hour. I'm looking at this trend line down here, and again, I'm not a trend line guy. I'm not a trend line guy whatsoever, but I want to show you how this trend line works out. This trend line right here is right down there. This one right here, where it's just below the lows there on last week at 1867. It's just below that, and I want to show you how this works out here, right? You see it here, same line. That would line up right there with that 1811. So until we get that VIX down there into that 1811 area, I see no reason for the bulls to be bearish, and the SPX should continue to go up. This is the QQQ. And I can't make anything out of this. I've zoomed out on this wave coming off of that major table pounding. This is a massive area to buy right here because we hit the 23.6 retracement going back to the 2002, 2008 lows. Right there when we came down to that 315. Granted, it was also the 2021 open, but it was a more significant move being down there. You can see we had broken below the 20% from the all-time highs level a few times back in February, back again in March. But when we hit that line, all of a sudden this went off to the races. And you look at this massive move that you made over here, 50-point move over here. So again, I've gone into this. I can't make heads or tails out of it as far as there being any dips in that NASDAQ move to the upside. So, it is what it is. But here is my best attempt to try and do that. You got a 1-2, same as you have on the SPX, same dates, same pivots. 1-2 looks like a completed 3. This would be your major 4 dip, which came down exactly again to the 23.6 retracement from this move down here off of this low. And your move up here should be up into the 378, 380 area as we go into the middle of the month, end of the month when everybody reports, which would be your 50% retracement of the October lows. The October lows being right down here around 350, October from just a couple of months ago. Again, here, wider picture on the QQQ, just to show you how it kind of looks almost perfectly like you got a lot of little mini waves when we're in this wave 3. Obviously, wave 4 coming down here, perfectly tagging. You're good to go. So here's the Dow. The Dow still hasn't completed as well, but the Dow also is below the 200-day moving average, below the 100-day moving average, greater than 5% from the all-time highs, still right there above the 50% moving, the 50-day moving average. You've got this still upheave, and this should still be looking for that 35,640, 35,640, 35,660 as we start going into banks, which start reporting at the end of next week. So again, here's your SPX on your daily. Not oversold, not overbought. You've got a happy MACD. What you'd be looking for now with a wave 5 is for a wave 5 to be putting in a higher high with the internals as far as your technicals being a little bit worse. And there you get your sell divergence so that we can get that wave 2. Money flow has obviously been decreasing over the course of the last couple of weeks. We're not really down there to completely oversold on the money flow. But again, because we are holding that 45.45, price is always the one that's more in control. Here's your NDX. The NDX still below that 15,700 from September, holding that or below that area right there in December where you had that double bottom right around that 15,700. And again, looking as if it does have a completed 1, 2, 3, and a 4. That 5 should be looking for that 15,700 area up there, which again plays out for your QQQ 378, 380. And last but not least here, the SPX, this is the weekly. We had those down weeks as we came in there. They had a multiple number of opportunities to break this thing and break it even harder, and it never did break. We've now got 3 green weeks on the upside, and as you can see, this is October where I was talking to you about, where we had that 10%, 11% move as we went into Thanksgiving, and not really any dip there either. This is very indicative of having a very closely resembled look as we had here in October, which was wave 4 bottom, the start of wave 5. I see no reason why we should be bearish on this and not be expecting to see that upper 4,600, lower 4,700 area before we start to get aggressively looking to the downside on the short. I can't tell you if it's going to be this week, if it's going to be next week, but that's the area that I'd be looking for. And obviously with earnings coming up, those can have a major impact since we are looking for a major 4 or major 2 wave for this wave 5. Once we've completed wave 1 up in that 4660, 46 or 4700 area, we should then be looking for a drop somewhere into that 4400 range. So for now, it is what it is. And yeah, guys, again, apology for the late reply or for the late video. Made it quick as I could. I'll see you guys in the chat room.